today's session. I'd like to take the next 1 minute to should I congratulate everybody that are still here up till this hour, up till this time. We've had quite a long break, and hopefully we will use this first period to, refreshing our minds to part of the concepts, part of the things we handle as our concept, as our style of trading here. So yes, we have been discussing about order blocks and liquidity and how price tends to move in a particular manner. So today we will just jump right into it. I'm choosing to use the volatility 75 index today because of its randomness. I just want you to know that we we are going to go in the near future. We will go into the area where we will pay attention to time and price, where we'll pay attention to the London session, New York session, and the likes of it. But before we do that, it is very important for us to gather a full grasp of the concept in its entirety, understanding how things work, understanding how um, the order block works, understanding how imbalances work, understanding how grabbing liquidity works, and all of that. So that is why I am taking today's lecture from the standpoint of the volatility 75 index, because it is not dependent on time or price, but price delivery is the same. The algorithm is totally the same. So we will just watch how it is done and then gather as much note as we can gather. Now, the very first thing we should do when we open our charts, the very first thing we should do is look out for potential liquidity areas. When I say potential liquidity areas, I'm referring to areas that you think liquidity is resting. That is how to study. And that's like the very first thing to do when you're studying, especially judging from everything we have been doing together for now. So this is actually a good place to start. Start by looking at where liquidity was grabbed. Now in this case, liquidity rests in form of buy stops and sell stops, and like we said, liquidity can either be in form of buy side liquidity or sell side liquidity, or previous highs or previous lows. Now that we have that in mind, we can go further to looking at the volatility 75 index. Now if you look very well, you can see that I had already mapped my high, because this is me bringing up a lecture. Candidly speaking, I didn't take this trade, so I'm just trying to record this morning as to the trade setup that would have been here, and even I think there should be one here. So we're going to look into the both of them as immediately as possible. Now we have marked out our buy stop or buy side liquidity. The next thing we can do is map our sell side liquidity, and if you check very well, all of these liquidities were taken. You can see that it was taken, right? So that's already gives us like a framework, knowing that before we begin to look for anything, we must first mark out liquidity and whether it has been taken or not. Now that is what is going to help us know whether we are on a potential support area or on a potential resistance area, because that is how we are able to find our order blocks. Remember, that is how we're able to find our order blocks. So let's take this as a case study, the one that happened here. Make the line red and a bit thick, so such that if we scale lower, because we were previously on the 1 hour time frame, so if we scale lower, This is only 5 minutes. If you scale lower, what do you notice? You notice the actual grab in the liquidity. Now, like we have always thought, and like we have always said, that price is fractal, meaning whatever we see happening in 1 hour time frame actually replicates itself in lower time frames. Now, if you look very well, if you just look at before we go before we go into this area, before we go here, before we begin to talk about what happened here, I want you to look at the red shaded region. I'm going to mark out. Just want you to pay attention to what happened here. If you notice, because we have several people with several styles of trading, so that's the reason why I am taking my time to do this. If you notice here, say I was a scalper, this was a previous low, right? This was a previous low, and what do we see happening to that previous low? It got taken out by this, and once it got taken out by this, it means that we are currently at, this is actually a potential support level. And what do we do when we are in potential support level? It's one of two things: either we look for imbalance, fair value gap, or since we have not actually gotten there yet, we can look at the order block series. What did we say was the order block that was formed? That if we want to get our order block, what will we see the order block is? The order block will be the last down candle before that move. And what did we say should happen to the last down candle? It must be aggressively broken. And as you can see, it got aggressively broken by this big candle. Because now, until that happens, we cannot look for entries off of the order block. We can't. So it is when the order block has been aggressively violated, like aggressively broken, the high of that order block, once that's been aggressively broken, then we can now say, okay, this order block is validated, because this is the last candle before that great move. And this is exactly how ICT teaches it. So that further goes to say that if this is the last candle before the break, we said that immediately this break happens, where price violates the high of this order block, immediately that happens, we can project our entry into the future. And if price comes back to that order block, immediately we can take the trade. We don't have to wait for a later time. No, we don't have to. That's not how ICT teaches it anyway. So like we can see, like what you see there, let me see if I can project it into the future a bit. So what we are seeing here now is price mitigating the order block neatly. It dug into it neatly. And where will be our potential targets? Anybody knows where? Our potential target will be a previous high. In this case, this will be our potential target. And what do we see? Price taps right into it, goes and violates that potential high. Now, you would be unrealistic to look for any other high here, because we are just scalping. We are assuming, because okay, for instance, imagine this was a 1 hour time frame. We won't go further to digging into other highs. We will look for closer proximities to the previous low that we had. And as you can see very well, price does its thing cleanly and neatly and violates this high, because what will be resting in this high are buy stops. All right, so and that's exactly what happened. And as you can see, price taps right into it and boom. But this is not our area of concern. So I just wanted to bring that to your notice, that price is fractal, and hence it can do the things you want it to do. So now going over to the juice for the day, we see here, let me see if I can take this out, and this, take this out also. So we see here that price did violate here. And what did we say we are going to do? The last down candle before the aggressive move, and it gets violated, right? This high gets violated by this candle. What does that mean? It means we can project it into the future, and there we have our entry. We have our entry right on this move. Price mitigates our order block at that point there. So obviously we see that the most important thing before we begin to consider candles at any area or at any region, we must first note, was there any high or low taken? All right. Now another reason why this move that we had structured here, another reason why it wouldn't have gone any further, was because the same thing actually applied here. Let me take this off. We see a high and price takes out that high, and when price takes out that high, immediately what do? We look for the last up candle before the aggressive move. And what is the last up candle? This guy here, because it has the most body, it has the most spread. Now projecting it into the future kind of like gives us a standpoint there. And this is the move that actually led to price taking out what was resting on this low. So you see how beautiful it is when you pay attention to context. So price can actually give us full cycles like that. First of all, you see price was rallying lower, 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 and then it took this low. When it took this low, we found the order block and we extended it to the future, got mitigated. We could have even extended this to the future in it to get mitigated, and price rallies up. Now when it was rallying up, price took out another high, and when it took out another high, it gave us a clean sweep to the downside. Once this sweep happens, we project the order block that led to this aggressive move. We project it, and once we do that, we have to ensure, before we project, we have to ensure that price really violates that order block, which is what we see here. Now once that happens, projecting to the future, we see that there is a clean mitigation, and what happens after the mitigation? Price rallies down to take what is going to be the target. The stops resting on these lows, on this low here, and because the whatever was resting on this low was taken by this, and that's why we have this aggressive move. Whatever was resting here, taken by this. Now we have this aggressive move sailing down, and what's going to be the target? This is going to be the target, and if you check very well, it actually does take it out. Now once it does take it out, what do? We look, is there any continuity? Because now there is a break of structure, or there is rather a liquidity taken from this low, and once liquidity is taken from the low, what do we anticipate? Higher pricing. That's exactly what happened. Pricing higher, and we see this rally up that violated the high of this um, order block. And since that happened, we can go further to say, projecting it into the future, we have our entry. So apparently, how many entries would we have had if we were scalping? We would have had this first entry, 1, second entry, 2, third entry, fourth entry, and you are just passing time with it on volatility 75, which happens to be the most dreaded and the most feared instrument in the synthetic indices market. But you would be doing a great job at it if you're handling it this way. And as you can see, what is resting above here are stops. So what is going to be our target? So we're going to target these highs, all the stops that are resting on these highs, which is why if we took this trade here, we would be anticipating to come out here, owing to the fact that we are on a owing to the fact that we are on a lower time frame, right? We are judging from 5 minutes, but if we were judging it from the 1 hour time frame, which was where we were coming from in the first place, that high that high would just be like the first thing we'll be aiming, but primarily we'll be aiming this high. And as you can see, right after this high was taken, the next target will be this high here, and it got taken properly. It took the high here and the high here, because these are relatively equal highs where buy stops will reside, and it took it smoothly. So you can see that at the end of the day, everything that trading entails is context. You must follow the context, because that's the only way you can get actual price delivery. So take your time, go through this video, try as much as you can to, pause the video, rethink all the things that we have said, and try to see if you can get context or gather context from what we have discussed. Remember, we are not even going into time and price yet. We're not going into the New York Hill Zone, London Hill Zone. We have not neared there yet. We're still trying to get our hands familiar with order block strategy, or with how ICT handles order blocks. Alright? So until then, I wish you all good luck and good trading. Bye, y'all.